Yeah, good evening, everyone. I want to welcome you to tonight's live. I okay, okay, good, beautiful people. Okay, so I know that today is a special day, and I want to congratulate and every one of you for being on this live. I apologize yesterday I didn't host. We are going to be perfecting what we planned to do today. Okay, so officially welcoming everyone to this meeting. Uh, those of us that were here the day before yesterday, the last meeting, we talked about candlesticks and we also talked about different types of candlesticks and the variations and how to differentiate them among themselves. Okay, so uh, all things being equal, we are not just going to jump into chat. Today's topic is support and resistance. Okay, tonight's section is one of the most important foundation in trading. I made sure that if you are here, so you will understand that this section is very important. Yeah, because many traders draw support and resistance, but very few actually understand why price reacts there. Okay, it is either one of the reasons could be that many traders enter too early. Uh, some also get trapped in fake out because when market that respect zones and you don't understand what a zone is, you will always get trapped. So it is better you understand where areas they call support and areas they call resistance. And one of the reasons why people also get trapped or also don't understand it is that some of them miss reversal areas or some of them get stopped out repeatedly without them knowing that either they are playing in the wrong zone. But in this class, I'm going to break this concept down step by step in a simple way. And later in the life, I will show you the hidden mistakes most traders make. I will show you some of the hidden mistakes most traders make when using support and resistance. So stay till the end of this class and you'll be glad you did so. I would ask you this question. Is there anyone here that still struggles with entry? Would like say that you also get faked out? You get faked out? For those that are a bit experienced, because this particular section is just for those that are completely new into trading and those that are experienced, because sometimes you might think you understand better, but as you learn on daily basis, you will see that you see market better. You don't become a trader by learning once. You repeat what you are doing. I would like everyone that is on this live, if you are here, tap on the screen, like the live, and also try as much as possible to share the link with others. If you've not subscribed, kindly subscribe to the channel so that while these sections are going on, you will be getting notifications whenever I drop this content that will help you. Okay. Also, drop the country where you are watching from or the state where you are watching from. So, I would like to see the state and the country you are watching from. So, this helps us. One of the goal of this particular training is to make sure that uh, traders understands trading from a simple. Trading shouldn't be complex. Okay, so I will try as much as possible to make it as simple as possible. So, okay, everybody from Nigeria, Port Harcourt, Lagos, and Enugu. Okay, so I'll try as much as possible to break it down. And in as much as I try to break it down, I would also want you to pay attention because tonight's class uh, we'll do more of practical. We'll look at talking, then I'll go to the chat and make explanations. Okay. So at any point you have any question, feel free to drop it in the comment section. I will respond to it while the class is going on. Okay. So our goal is to make sure that everybody here understands support and resistance. So I would do a little so today we are doing support and resistance. And the goal of today is to help both beginners and those that are experienced to understand key levels, support, resistance, rejection, trading, also understand fake breakout, and also understand time frame and superiority of time frame. Most people trade without the understanding on. Most of them don't understand exactly how they measure their major support and major resistance. Okay, but there are key levels. There are also levels that are minor levels that you also need to pay attention to. Okay, support and resistance. I've seen people do support and resistance in a way that sometimes I begin to ask myself, who taught this one support and who taught this one resistance? So I'll be giving you my definition and general definitions. Okay, so we'll be using the drop board. The drop board is where I'll be using our marker to draw. Okay, so while we draw, I would explain with drawing, just like I'm teaching with a board. Okay, so let's get to our drawing board. So the question will be, let's first of all look at support. So what is support? Okay, some of us here support, 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 support. What is support? So take this definition. Support is an area where price tends to stop falling and buyers begin stepping in. Okay. Support is areas where price stops falling and price and buyers begin stepping in. Now, before we get into support or resistance, I would first of all want you to pay attention to this word that I will be using towards this particular life. There's what I call there's one thing I call reversal point. Okay, so let me explain reversal point so you can look at the screen. Let me explain reversal point. Okay, so reversal point is that point that market change direction. So there are points that market change direction. So if you observe the last class with when you saw the chart, we'll still go to chart. So you see market moves like this. Okay. So when market moves like this, market doesn't move in a straight line. Market will definitely go in a wavy pattern. Okay. Market moves in a wavy pattern. Now, this point, you will see that market was going up here, got here, it changed direction and started going down. It also got here and changed direction and started going up. Got here, changed direction, started coming down. Got here, changed direction and started going up. The same here. This is where it changed direction. 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 So I call these points of change of direction, I call them reversal points. Okay. I call them reversal points. They are reversal point. So whenever I mention reversal point, you should be able to understand what I am talking about when I'm saying reversal point. Yeah, there are some notions that I have seen the way people see support that can be confusing to a newbie. Okay, it can be confusing to a newbie. Now let me clean this up. Okay, let me leave it here. Now, if we say reversal point, if we say that support is an area where price tend to stop falling and buyers set in. Okay, now I'll come back to this. Now, so let's see, this is market. So if you remember in one of our classes, when price is dropping, it means price is selling. Okay, when price is dropping, it means price is selling. So this is the point where price stops falling and buyers begins to step in. Price starts going up. So when it's going up, it means that the buyers are in the market. Okay, so this point that price stops selling and starts going up is seen as our support. Okay, is seen as our support. Okay, now, all things being equal, either you look at it from this angle, or you can also say that as support, it's that area that acts like the foundation or the bottom of the market, where price struggles to break through. When the selling, a subsequent time when market is coming, price will definitely struggle around here. It will struggle around here and bounce up. So it means that support is actually the floor of the market, where price, when dropping, struggles to break it to go up. Okay, where price struggles to break it to go up. Now, all things being equal, having this understanding would help you. Okay, that any area, any reversal point that price will drop and struggle to break is a support. Okay, now, all things being equal, this is support. Let's call it X. Okay, now let's also get to let's also get to resistance. Now, for resistance, resistance is, we can see resistance as the same area where price gets to struggle, buyers setting, and price starts dropping. I'm building a mental picture in our head, and at a point, I will try as much as possible to distort that particular picture. Now you can see that our support is down here. Okay. Now, but for resistance, R, when price is buying, this is when price is going up, it is buying. If you remember, I mentioned it here. While it's going up, it is buying. That point it gets to, that reversal point it gets to, and starts dropping. Because when it gets to that point, sellers comes in and price will start dropping. Either you say market is moving down, or you can say it started selling. Okay, or you can also say price became bearish. Okay, either way you can, is still the same thing. Either you say price is selling, as it's going down means price is selling. Okay, all things being equal. So this reversal point, so I'm calling here reversal point. You remember I mentioned our RP, reversal point. Now this point that price got to and starts coming down, this point becomes our resistance. This point becomes our resistance. So we have our support down and we have our resistance up. Now, if you understand this, this will guide you. But there is a formula that I always use because this will confuse a trader. I've seen people do this. I've seen people do this. This is current price, okay? CP, current price. And they tell me here is support. There is confusion here, right? Because you would say that this is support because from what I showed you earlier, this is support. This is support because these are reversal points. You know, price bought, price was buying from here. Price was buying from here, got here, starts dropping. Okay, price was selling. When they got here, it stopped selling. Buyers came in and pushed the market up. So here becomes our support. The same thing happened here. Price was selling, price got here, buyers came in and price began to go up. Okay, the same thing happened. Price was selling, buyers came here, price began to move up. Okay, so all things being equal, these are our support. Now, but in a situation like this, you will observe that it is here because it is at this point that price was selling. It is at this point that price was selling that buyers came and market started to go up. But I am of the opinion that at this point, this support is no longer a support, it's now a resistance. So how do I make you differentiate to understand when a support has become a resistance? Because your support can become your resistance and your resistance can also become your support. So if you can have this formula and work with this formula, it will help you, especially beginners, it will help you to understand when you can say that this is support or this is resistance. Go with this formula. Say that your support, okay, what determines whether it is support or resistance is the current price level. It is the current price level. It is where price is at the moment that determines if this place is support or resistance. Okay? That's what determines if here is support or resistance. So the current price level. So how do you do this? You can say price, which is P, is equal to resistance over support. What this means is that, okay, resistance is seen as that reversal point that is above price, while support is that reversal point that is below price. Okay, using this demarcation or division will help you see that your R that is up, any reversal point that is up is resistance, and any reversal point that is down is support. So let me give you clear picture. So let's say this is market. Price is moving up, came down, went up, came down, went up, came down, went up, and stopped here. This is where price is at the moment. And you choose to mark this is support. Let me wipe this board completely so we can have a clear view. So let's say this is price moving this way. Okay, price is here. So let's say this is current price. So let's mark here. This is our resistance. Okay, this is our resistance based on what we learned. This is our resistance, and this is a reversal point, right? This is another reversal point. This is another reversal point. This is another reversal point. Now remember, this is price. So this is P. This is P. Okay. So if this is price, from noting the fact that the definition that says that that is when market starts dropping and it will start going up. So this point that it starts going up here becomes your support. Okay. Now, if that be the case, but in this situation, this is where price is. Based on our formula that says that price is equal to R over P, R over support, sorry, R over support, which is where price is. This is where price is. From here, this is anything that is up is resistance, anything that is down is support. Am I clear? If you understand this type, I can understand you. Anything support, anything down here is support, anything up here is resistance. Because it gets confusing when you are paying attention to the definition that says when price is selling and starts going up. It can be confusing because there is this saying that says that your support can also be your resistance and your resistance can also be your support. So it is in this case that you will see that this your support has turned to resistance. It was a support when price was still above here. It was a support when price was still above here. But immediately price broke through that support, it has become a resistance. So this plays out a lot. It has become a resistance. If I have time, I can tell you the impact when we get to, well, it is also in one of our class when we start talking about change of character, you will understand what happened here. Okay, so immediately it breaks through here, it's no longer a support. Here is no longer a support. So far it breaks through the support now becomes resistance. Okay, if you have any question, you can drop in the comment section. I will definitely look at it. And also, not following, kindly also click the subscribe button and subscribe. So we are making progress. We are making progress. Are we together? Now, I hope I'm not sounding too technical. So make it simple. Support is the roof. Support is the resistance is the roof, while support is the bottom or the floor. Okay, so when price is falling, it's falling to meet support. So when it hits support, it's likely going to bounce and get to when it gets to resistance, this resistance will resist it, it will drop. So resistance acts like a ceiling, while support acts like a floor. Okay, the resistance acts like a ceiling, while your support acts like a floor. So, but you should be able to understand when support has turned to resistance and when resistance has become support. So what I said that happens when market breaks support, just like the formula I gave you, uh, market also does the same thing like this. Okay, so here support, support, support. Now, this is what we are supposed to call resistance. This is what we are supposed to call resistance. But at this price, at this time that this price is here, everything down from the price down is what? What is it? Is support. Okay, someone is asking in which time frame is best to mark out this level of support and resistance. It's likely to be marked on every time frame. Now, when we get to the key levels and when we get to superiority of candle time frames, you'll be able to understand the impact of different time frames on your chart. Okay. Now, so I just want us to be on the same page, understanding this. Okay. So I react. If you understand what I'm saying, actually give us a thumbs up or use a like to say that you understand. Are we together? Yeah, if you are following, say you are following. Okay, so we will do a little practical. We'll go to our chart. Okay, we'll go to our chart and look at the price and see if we will see anything that looks similar to what we have just explained. Similar to what we have just explained. So let's get to the chart. Okay, so that's the chart. Hope you can see my chart. Okay, so let me shrink it a little so it will make sense. Yeah, confirm you can see my screen. Okay. Yeah, your question is not postponed. I will answer your question who is asking about what time frame. I would answer it. It's also contented in the training. Okay. So I'm not going to mix it out. Now, so if you look at this chart, you would see in practical that uh, price went up. Price went up here, got here, and started coming down. Okay. So this is our resistance. So at this point that price got to, while it was selling, at this point buyers came in and market started buying. Here is our support, resistance, and support. So when you spot support and resistance, you mark it out with a line. Okay, you mark it out with what? A line. You mark it out with a line. And all things being equal, the essence of understanding support and resistance, it will help you get rid of bad entries. You find better entries. Okay, understanding support and resistance, it will also help you improve your target. It will also help you understand great exit, where to exit. So it is better you understand your support so you can know your levels. Now let's start talking about levels. Okay, let's start talking about levels. Now, but price was buying at this point, he stopped and started selling. Also got here, it was stopped by sellers, by buyers, and started going up again. Okay, so you can see that this market is not moving on a straight line. Okay, so let's shrink and make it look better. Okay, so let's look at this. So let's look at this. You can see my chart, right? Okay. Now, so when you look at this, we'll look at what we call there's what we call key levels. What are key levels? Key levels are those levels of support or resistance that price has tested multiple times. Okay, what do I mean? Those levels that price has tested multiple times. For instance, so let's say we have our resistance here and price touches it once, two, three. One, two, three. Okay, this is a key level. And when drawing a support and resistance you want to trade with, you have to pay attention to the key levels. That does not mean that you should not ignore the other levels, because there are key levels, there are also minor levels. Key levels are those points in the market, those areas where price touched three times or even twice, but price touched it more than once. Price touched it three times. You will see that price went there one, two, three. They are key levels. Okay. Now, all things being equal, let's separate key levels from normal levels. The normal levels are those points that price just changed direction. So let's say this is the market, this is a key level. Okay. So when you are drawing an area to trade, this point is a key level. But this particular area of support, you can't have any other point to support it with. It's just one. The same thing with here. Okay. The same thing with whatever that is happening here. But this point where price touched three times, they are key levels. So let's look at it on the chart. I can change this from candle to line chart. If I change it to line chart, it will even be clearer. Okay. You will observe in this particular chart, you would see that this point price touched here, but just once. So it's not a key level. Let's get back to candles. I think candlesticks will help us understand if actually is a key level or not. Let's zoom. Okay. There are some errors I would correct tonight. I would correct a notion that a whole lot of persons have. Now, uh, what are those notions? Support and resistance are not lines. Those notions are, people use lines to draw support and resistance. Support and resistance are not lines, they are zones. You don't say support and resistance is a line. Support and resistance is a zone. And what do we mean a zone? Uh, when you look at this, you would observe that when you look at this, you will observe that some people will ask me, some students will ask me, boss, should I put my line on top of the wick, on top like this? So to them, this is support. Just putting the price on top of this wick is resistance. Sorry, putting the price here is resistance. No. Now, if you have situations like this, let me draw it before we look for it. Before we look for it on the chart, if you have a situation like this, this is a candle wick. Let's say price moved down, came up, gave us a candle here. Uh, give us a candle here. Now, all things being equal, when you are marking, okay, so let me make it three. Let me make it three. Now, when you are marking this place as resistance, you don't say resistance is here because this is the highest level. I'm talking about ranging market. I will talk about ranging market when we are talking about when we are talking about trend line. We'll talk about ranging market. So for you to mark it, you mark this whole level. This area is your resistance. Okay, just to touch this week here, you mark all of them. So far your line did not touch the body of the candle. Grab all the wicks you have around there. Grab all the wicks, cover all the wicks. Okay. Uh Nino, you're asking about when market is ranging and minor levels is showing entering sign. When market is ranging, it depends on your strategy. If you don't have the strategy that I call front and back, there are some strategies for ranging market. You are not expected to trade a ranging market. So when price is ranging, the best thing for you to do is to leave the market and wait for a proper trend. So let's look at here and see how we can map out, like as we have here. uh, if we want to mark out this zone, this is what we are going to map out. So it did not touch here, so we will not include here as the zone. Let me use two lines here that I can use. Let me see if I can get a rectangle. Uh, Let me see if I can get a rectangle. That's why I would have preferred what I've used. What's it called? Trading view. No, this will not give me what I want. Objects I have here. I can't see a triangle, as in a square or a rectangle. I can't see them here. This is a Fibonacci, this rectangle trend. No, it won't give me what I want. It won't give me what I want. So I'll be using this line too to map out levels. I'm using this line to map out levels. So uh, if I mark the low, so this one didn't touch it. So let's look for a new level, a new. So let's look for a new level. So let's look for the one up here. So you can see that price touched here one and touched two. Okay. So it's a major level. It's a key level. Okay. So let's also look out for another key level. There's another key level here. So let's also look out for another key level. There's another key level here. This is another key level here. So you can see that price touched here twice. This is a key level. It touched it twice. There is one here. Also touched here 2, 3. Okay. These are key levels. These are areas where price touched more than twice. 2, 3. Okay. Let me clean it and scroll forward. So in this situation we have here, this is our resistance. This is our resistance. Let me take it forward. This is our resistance and this is our support. So you can see that from here to here is our support zone. Okay, from here to here is our support zone. Price is likely going to reverse here, or price will break it completely, touch here and go down. Okay, So these are our price, these are our key levels. Key levels are considered those areas that price touched several times. So let's look at the minor levels here. Can we call this a minor level? Yeah, but let's look at it well by using a line. Okay, price is ranging here. What we have here is a ranging market. What we have here is a ranging market. But at the same time, price touched here once, two, three. It's also a key level. Okay, so we'll be looking at those areas where price touched market more than once. Now, so the areas we consider as the minor levels are those areas that price just touched once. This would have been nice if I shift closer. So let's get closer to the chart, to price. Now, so let's look at here. You would see that somewhere here that we marked earlier. Here, this is the place we marked earlier. So this is a minor level. These are the levels I call minor. But these areas can also be dangerous sometimes. Price can reverse around here. Now, these areas are the areas I call minor. You see, you can just see one price touch it. Now, so while drawing your support and resistance, let me tell you things you should pay attention to. It will guide you. Those things will guide you. Number one, let me delete these things off. Always pay attention to where price is. Okay? Don't bother yourself. Number one, pay attention to where price is. Don't bother yourself going back to go and check history. When you are drawing support and resistance, don't bother going back to go and check. Let me see. Let's see if there is a major zone here. Let's see if there is a key level here. This is history. You don't need it. Don't bother yourself about history. Okay? Don't bother yourself about history. Another thing you should also pay attention to so it doesn't confuse you. Okay? Make sure you are closer to price. Make sure you are closer to price. What I mean, this is price. Make sure you are seeing your chart. Play around from here to here. What you can see on your screen. Because these are the likely levels that market is going to respect. Look at this. There's a key level here. Pay attention to areas like this. This is what you are seeing. Don't go and check back because checking back is not necessary. But if you check back, you will also see that this point that market got to a change direction. Also, there is also a part in the market. There's also a part in the market that if you go back, you also see that price touched it. You also see that price touched that part. So don't bother yourself going backward. Pay attention to what your eyes can see. Okay? Pay attention to what your eyes can see. Two, while drawing your leg on top the body of the candle, okay, you are free to play with the wick. You are free to play with the wick, but avoid putting your line or your levels on top of the candle. Okay, avoid it. That will help it seem more clearer to you. So don't mark across the line. Don't mark across the line. So let's look at this market and map out what. So let's look at here. This is a level. This is a resistance, which is like the high. But we are not, it's not a key level from what we are seeing here. So let's get to this next resistance. Why do we call here resistance? We call here resistance because it is above price. This is price level. This is where current price is at the moment. Okay, it is up. So let's look for another key level. So let's come here. There is no key level here. Okay, price touched this particular spot one, also touched it too. So it's also a key level. But because of price breaking through it, we are not going to make use of it because price has broken through it. We'll be paying attention to the ones that price has not broken through. So let's look for another one. So here is supposed to be another key level for us to pay attention to. Except let's shrink this. If we shrink it, can you see the chart if I shrink it? Are you seeing the chart? I just feel if you shrink it, it doesn't look good again in the eyes. Okay, so pay attention to key levels because price will respect the next level. All things being equal, if price leaves a key level, so let's say we have two key levels here. We have two key levels here. If price leaves here, the next place is coming to is here. So let's go back and see if we can identify if there is a level to this. Now, there is something I would tell you here so you pay attention. Anytime you see price break through a support, what you should be looking for is the next support after this level that price broke through. Okay? What you should be looking for is the next support that price broke through. Now, so let's see if that place is a key level. I mean here. Here. If we go back, so we can't see anything so for this class. Where this one would have been a bit more easier, it's 1 minute time frame. A 1 minute time frame has a whole lot of movement. Beautiful. So beautiful. So we have here. So we are playing with this level. Okay. We are playing with this level. There's also a key level here. So let's look at that one too. Let's look at it. So this is also another key level here. Okay. It's also another key level here. You can see this. You can see that this point price tested it twice. This is the third time. Okay. This is the third time. So this is another key level. So you can see that at this point, see what is likely going to play out. At this point, when price is going up, when price is buying, it's likely going to reverse here. It's likely going to reverse here to drop. But it cannot reverse if it doesn't show us a bearish signal. If it doesn't show us a bearish signal, it can't reverse. But it has to show us a bearish signal before it drops. If you look at here, you will also observe that there is also a bearish signal before price dropped. Let's see if we can zoom and see. Let's zoom and see. Yes. So this is, let's change the time frame and see if we can also see better chart. See a better key level. Okay. This is a better key level. So this is the screen. Uh, this is the screen. See another one here. Okay. This is the low of this market. I'm not seeing another one. Okay. So most likely this price is going to drop until it finds another key level before it will go up. Okay. Okay. So now all things being equal, I believe I've dwelled on the key level. You should be able to understand that your key levels have to drop. There are those areas where price tests more than once, three times that you can see on the screen. Okay. And somebody was asking about time frame. Before I go to time frame, I would want to explain to you uh, another level you also have to take note of in the market. There are levels that are called the highs and the lows of the day, or the highs and lows that you can see from there. Okay. Maybe when we get to trend line, you will understand better. Okay. So when you see a chart, the number one thing you should map out even before you start looking for your key levels are your highs and your lows. Okay. Your highs and your lows. The high is the highest point you have seen the market move, and the low are the lowest point you have seen the market also moves. Like in this situation, here is the high, this is the low. Okay. You first of all take out your resistance that is at the highest level, also take out your support that is at the highest level. There is there is an indication, there is an utmost indication that these areas can be major or key zones. They can be key zones. Yeah, just because we don't want to go out of our screen, they are key zones. It means that there are areas in the market where price touched it and went up. For example, look at this. Like here, we are not seeing the second point where market touched it more than once. But if we go back the screen, we will see. Okay, let's confirm it. Let's go back. You can see that price reacts on those lines. You can see that price reacted here. If we go back, we will see where price also reacted there. Okay. If we go back, you can see another one, right? You can see another one. Just a minute, please. Just a minute. Sorry, apologies. So you can also see. So it is necessary you map out your highs, the highest level, your highs and the lows. Okay. map out your highs and the lows, because price is actually going to respect those highs and the lows, because that is the next support that will be broken. That is the next support or resistance that will be broken before price will create a new high. Okay, before price will create a new high. So take note of your support, take note of your resistance. Okay, so now let's pay attention to time frame. Now let's go to time frame. From time frame, we'll explain that someone that asked a question that which of the time frame is important or is more important than the others. So I will make this explanation so it will be clear. Now we have different time frames, and let me explain. Each of the time frames gives a report of transactions within that particular number of hours or days or whatever. We have the 1 minute time frame. Okay, we have the 1 minute time frame. Look at it here. We have the 1 minute time frame. We have 5 minutes time frame. We have 15 minutes, 30 minutes, 1 hour, 4 hours. We have daily, we have weekly, we have monthly. Now, what does it mean? It means that if we are in 5 minutes time frame, every candle that you see in 5 minutes time frame, it took that candle 5 minutes to form. Okay, it took that candle 5 minutes to form. If you are watching up to this point, kindly give yourself a thumbs up. Give yourself a thumbs up. So it took it 5 minutes to form. If the time frame is 30 minutes, it took the candle 30 minutes to form. So this candle shows the activity that happened within 30 minutes. If this is 30 minutes, if it is 5 minutes, the same. If it is 1 hour, it took each candle, like this time frame. This is 5 minutes time frame. This is 5 minutes. That means each candle, it took it 5 minutes to form. If we go to 1 hour, each candle you see on this 1 hour chart, it took it 1 hour to form. So now let's look at like this candle, it took it 1 hour to form. So when you are drawing support and resistance, or you are drawing your major key zones, higher time frames have higher powers. They are superior to lower time frames. I said again, higher time frames. Which ones do I call higher time frames? Okay, 5 minutes is higher than 1 minute. 15 minutes is higher than 5 minutes and 1 minute. 30 minutes is higher than 15 minutes, 5 minutes, and 1 minute. 1 hour is higher than all the time frame you see here. 4 hours is higher. So if you see, if this is a support, if this is a support, or let's say a resistance on 4 hours, even if your take profit on 1 hour is here, this place will reject your price will struggle, market will struggle to cross here. Market will struggle to cross here because this is a major resistance, because you drew it from 4 hours. For example, let's get to 4 hours. Let's say 4 hours. So let's pay attention to this. Let's give here, let's put our line here. No, okay, let's use here. Let's use here. Price has been ranging here. Okay, you can see from 4 hours. Now, all things being equal, what you have here, most times what I do is I use a different line to draw. So you can see that price is playing around here. You can see that price dropped from here to here. Now, but mind you, you see from this point down to here, there are smaller support and resistance inside. This is 4 hours, 1 hour or 15 minutes or 10 minutes. In fact, or 15 minutes, you will see that price had higher high. You will see that price was also creating resistance and support. Now, let's take a look at it. Let's take a look at it. Let me use this to mark here so that when we go back, we can identify it. Okay, so let's go back. Let's go to 15 minutes. Before we go to 15 minutes, let me mark the range I want to measure. Okay, just from here to here. Okay, so let's get to 15 minutes. When you get to 15 minutes, you will observe. Okay, so let's go back. So you will observe that before line, before price came here, before price came from here, you would see there are movements. This is what 15 minutes. 15 minutes. Let's go back. This is 5 minutes. You will see smaller support and you will see smaller support and resistance because it's a smaller time frame. If you go to 1 minute, you will see it more. So let's be going back. I'm trying to go back to where I have that line. Okay, this is 5 minutes. Okay, so you can see before price will leave that zone and take up. Okay, we are getting closer. So from here, you can see that price was also doing up and down, up and down, up and down, up and down. But you see that from 4 hours, what we saw was just a straight candle. Okay, so situations where you have maybe a support or a resistance. Let's say you have something here in the name of support or resistance. So what do you mean by price ranging? uh, okay, I'll quickly explain that. But I will give more details when we get to trend line. So let's assume we have this now. Maybe this is a minor area. 4 hours will break it with speed. Okay, so let me quickly respond to you. The person that is asking ranging, what do I mean by ranging? Now, in the market, there are three directions in the market. There are three directions how market moves. Either market is trending up or market is trending down. So this is one, this is two. So if it is not trending up or trending down, if it's moving sideways, it means it is ranging. Is it clear? It means it is ranging. Mr. John Williams, are you okay? It means it is ranging. When price is not going up or going down, it means that price is ranging. Now the question the person asked about, what about somebody, Lilo asked, what about when market is ranging with the key zones and the minor level it is showing a entry sign? Okay, I think I answered that earlier by telling you that in this situation, we will always tell you to stay out, because if you want to buy here, let's say market got here, okay, you want to buy, sometimes it can break it. It can break it because it does not show clear direction. It's only when we start learning about trend that you will understand when market, what you can call a trend. Okay, but in a ranging market, you are not expected to take action. You are not expected to take action. I think I've been able to cover all we have for tonight. Uh, if you have any question, feel free to ask. Okay, feel free to ask. We've looked at the major zones. We have also looked at the minor zones. We have looked at how to draw your support. We've looked at how to also bring it down. Uh, these things are, when you understand some of the secrets, you would know it's not a magic. Okay, it's not magic. Some of the results you see, they are not magic. They represent those support and resistance represents areas that price will definitely pay attention to. Okay, candles are normal human emotions. When you see those candles, they are normal human emotions printed on a chart. These candles you are seeing, they are normal human emotions printed on the chart. This candle you are seeing here, okay? They are normal. When people are buying, people are selling, that's what plays out. Remember, I told you when it is going up or when it is a bullish candle, it actually shows the emotion that people are buying. When it is bearish, it shows that people are selling. Okay, so it is important you understand that and know how to exactly draw your support and resistance. So some of the mistakes that like I would say traders make, okay, some of the mistakes is that uh, uh, sometimes let me put this, drawing, there are situations you see this chart. Okay, so let me correct this. There are situations you see people draw, you see their screen, their screen has different line. Their screen has different line. uh okay, there are times you see people, their chart has different line. Their chart has different line, like one, two, three, gets to key level always. Okay, so that will price from up to down. Okay, so those your minor levels. So what you can use to note those minor levels are, you can use a smaller line to draw them, knowing that on a smaller time frame, when you check, you will see price react here and drop. Okay, how to know if price will not respect this level? I think I would say that in the next class, so I don't overstretch this video. Okay, so I don't overstretch the class. So support and resistance, the mistakes, avoid those mistakes. Drawing lines is that instead of zones. One of the mistakes traders makes is that they draw lines instead of zones. Okay, and some of them enters, another mistakes they make is that they enter without confirmation. When we get to market structure, I would mention a rule. I will tell you a rule on how market reacts on a support, what you should be expecting on a support, and how to know if price is going to break the support or if price is not going to break. Because most of us will be wondering, how do I know if this supports? Because if price gets to support, sometimes it breaks it, sometimes it bounce on it and go up. How do I know if price will bounce on it and go up or price is going to break it? Okay, so in our market structure class, I would explain what to expect here. Okay, now, so another mistake I know traders also make is that oftentimes they also ignore market structure. So it is good you also understand market structure, understand what market is going to do at this point of support. Okay, know if you are to enter or not. Okay, another mistake that traders also do is that they trade every touch emotionally. So when price touches here, they will start selling. I've seen a student who signed up to my mentorship, but I watched him try to trade. I observed that his strategy says that immediately price comes here, that he should just jump in and buy. And I was like, are there no other candle confirmations before you jump in? He said no, that they told him that if price comes here, these are wrong teachings, that they should just jump in and buy. And it doesn't work that way. I can tell you for free. It doesn't work that way. So you have to also be careful so you don't make these mistakes. So which of these mistakes do you make? You can write it on the comment sections. Okay, I don't want to laugh at you, but it will help me understand the kind of mistakes you also make. Okay, I hope we are able to understand what we have learned. We have been able to understand zones. We have been able to understand resistance. We have also been able to understand how market react. Okay, at some point you ask yourself, is this support or resistance? Some of you, can you draw support and resistance and measure resistance and measure, will I call them key levels, and send to me on the WhatsApp? Okay, that will help us also know if you are learning. Draw key levels and send to me on WhatsApp. Drop it in the group in WhatsApp. Drop the key levels. Okay, tonight was not only the foundation, because once you understand support and resistance, the next step is learning candlestick confirmation, market structure, liquidity, fake breakout, smart money movement. So these are the next things you will learn. Okay. So if tonight's session gave you value, I would like you to also click subscribe button once again and become part of this great family that is actually growing. And I know that a whole lot of us are making progress. Okay, we are not just we are here not just because we are learning we are learning forex. We are building disciplined traders. Okay, I just try as much as possible to make sure that I share this and also to get you better, so that most times you can actually come back here to rewatch trading every breakout. Oh, you trade every breakout. I see these are some of the mistakes we make. Immediately there is a breakout, we jump in. So I think tomorrow's class will go deeper. We'll go deeper into either we'll do trend line and look at market structure. Okay. So turn on the notification and also try as much as possible to invite another trader, because I think every trader deserves to be in this class. Okay. Turn on the notification so that next class you will not miss out. And when next I also post, because I'll be posting more of trading content that will help you. Okay, that will all make progress. Thank you very much for attending tonight's class. If you have watched up to this point, a thumbs up for you. You're a great guy. It shows that you are determined and committed. Together we are going to make this progress. You say we are going to announce the winner of the invitation contest. Okay, I think that I will do that in the group. Okay, I traveled and came back tired, had a whole lot of things that I wanted that I didn't conclude, a whole lot of things that I left behind. Okay, so I will do that in the group. Okay, Amy, you are among the top contenders, so I know that I already have something for you. Okay, I have something for you. You are doing well. You are doing well. So that will be all for tonight. See you guys again tomorrow. Boss, what about the winner of yesterday's question? Okay, I think I have done the last message I sent to you. Did you respond? Check, check. Okay, so I will do it now before I go to bed. If I have any outstanding that I've not done, I'll try and do them before I go to bed. Okay, it was a stressful day for me. Okay, yes, I did. Okay, I will respond to you now. Beautiful, beautiful. Any more question? Any more question? So that will be all. That will be all. So do have a wonderful night. See you in the next class. Bye.